Fetch AI at the time of this recording continues to hold within our key area of support between the 1.37 and the 1.211 USD. And at the time of this recording, we are also holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue pushing higher. And on today's video, I will be discussing the most significant key areas of supports that we need to continue holding above, and above all, give you reasons why I believe we can easily see more than a 10x in this bull market. So make sure that you stick around till the end of the video, and I will be starting the video here on the daily chart by first giving you my long-term price prediction analysis, where I still believe that we got our bear market lows last year and started an impulsive movement to the upside in a move that peaked above the 3.479, giving us the high for this edit wave count 1. And after we peaked in that wave 1, we started a corrective structure in a larger edit wave count 2, whose minimum target areas I have marked on the charts, an area that we fully maximized. And after we fully maximized the target area, there are high chances that we now have a low in place for the second wave. And in the next coming weeks, we are going to see an impulse to the upside in an edit wave count 3, then expect a wave 4, and then finally peak to the upside in a wave 5, taking us to new all-time highs. And the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, where you can all see that we can easily hit the minimum target area at the fib level 1.618 that lies above the $6, then expect the wave 4 and then the wave 5 possibly taking us back above the $10. And that means that we can easily cash out more than a 10x in this bull market. Jumping to the 4-hour chart for the short-term price prediction analysis, I want to start the video by first giving you a recap of what has been happening from the lows that we made on the 4th of November, where we started an impulsive movement to the upside that peaked above the $1.65, giving us the high for this wave 1. Then we started a corrective structure in a wave 2, whose minimum target areas I have marked on the charts using this red target area, an area that we have now fully maximized and also continued to hold within the area. And that means that in the next coming hours or maybe days, we are going to see a reaction of this area and give us an impulse to the upside in a wave 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, and that lies above the $2. Then we can expect a pullback in a wave 4, then continue pushing higher in an edit wave count 5. We also need to have in mind that maybe at some point we might get some bearish momentum. And that means that if we get some bearish momentum, we can easily see a break out of this red target area to the lower side. And maybe at some point we lose support above the $1.162. And if that is the case, then that will be suggesting a more bearish case scenario that is better seen on this chart, where I believe that from the lows that we made on the 5th of August, we first peaked in a 5-wave structure as shown on the charts, completing the formation of an even larger edit wave count 1. And after we peaked in that larger edit wave count 1, we started a pullback in a larger edit wave count 2, whose minimum target areas I have marked on the charts using this blue target area, an area that I came up with using the Fibonacci's, and that area lies between the 1.225 and the $0.923, an area that we saw a pullback into, though we didn't quite fully maximize the area, and started this bounce to the upside in a larger edit wave count 3. And because of the impulsive nature in the wave 3, I have also been expecting to see a 5-wave structure play out within that larger edit wave count 3. So if by any chance we continue holding within this red target area and get a bounce to the upside in this 5-wave structure, that will be confirming and also completing the formation of these wave 3. But if by any chance we lose micro areas of support, then I will be expecting to see a breakdown move back into this blue target area over here to fully maximize the area, give us a low, that is another low for the second wave, before we can finally bounce to the upside in the formation of these larger Elliott wave count 3. So that is all I'm expecting on the short term and also on the long term. And I believe that the next move that will play out is all based on what plays out within the red target area. If we bounce within the red target area, then I will be expecting an aggressive bounce to the upside in a larger wave 3, getting us back above the $2.7. But if by any chance we break to the lower side of this red target area, then I will be expecting a breakdown move in a move that can get us below the dollar mark before we can finally bounce to the upside once again in a wave 3. So that is all I'm expecting to play out on the VChain, on the Fetch AI chart on the short term and also on the long term. And let's be patient and see how that plays out, and I will be keeping you up to date.